It's Sam. We just got some interesting news here today in regards to Russia and Ukraine and Britain and the US. We also have a couple updates I need to fill you in on what institutional investors are doing, on some new reports and some new metrics, and some big news that's coming up this week that could have an effect on the market. Now, I will also remind you of what I'm doing going forward because I think it is something that a lot of people probably should do. Now, of course, I'm not a financial advisor. I'm not a crypto analyst. I don't have a crystal ball or anything like that, but I am someone that's watching the market pretty much daily. And I think I have a good handle on what to do going forward. If you guys don't mind, hit the like button and subscribe button. I appreciate that. There is a link underneath the video too to FTX. I think they're a great platform to trade on. And they also just got a huge piece of news that they are starting a new area of their company. They're going to try to launch a new team focused on driving cryptocurrency and non-fungible token adoption in the gaming world. They think there's a lot of opportunity, and this will be reportedly a crypto as a service platform through which game publishers can launch new tokens and provide support for in-game NFTs. So this is really cool because you might have access a little bit early, and that's just me saying that. I don't know if that's actually how it's going to work, but you might have a little bit of access early, and they did close a couple of huge funding rounds recently. So the fact is you want to be on some of these platforms that have a lot of money because oftentimes they do give back, which is why I say that you should check out the link underneath the video. You can also, if you start buying crypto worth $10 or more, you can get a chance at winning free crypto. It's a great platform with really low fees, so check it out underneath. Now, the cryptocurrency market was looking pretty rough. We were near $36,000 yesterday, but we're back up to $38,000. And we were here just a few weeks ago. We were at 33,000. So it's hard to remember exactly where we were. I mean, 7 days ago, we were at 45,000. So it seems like we're down a ton, but when you look from just a few weeks ago, we're actually up a good amount. Now, altcoins were really bleeding up until just about an hour ago, and a lot of them have pumped up, 2, 3, 4%. And a lot of that's because the whole market is actually looking pretty good. I mean, if you look at the stock market, we were really bloody last night. Even this morning, the NASDAQ was down about 1%. Now it's up 0.34%. Now, why is this all happening? Well, the UK did announce their first tranche of Russia sanctions. Basically, what they did was they said that they're going to target a few banks and a few high-worth individuals, which is interesting because for some people this was not enough. But they say the UK assets are going to be frozen and they will be banned from traveling to the country. All UK individuals and entities will be barred from having dealings with them. I don't know how much that's really going to affect them. And it's not like Putin really cares, right? It's not like these people are going to Putin and then they're going to make Putin change his mind, at least my opinion. And of course, I should just say too, I'm not a political scientist or anything like that. I'm not trying to go outside my realm. This is just kind of what I'm thinking. But they also say here that a lot of people think that this isn't enough, that this shows a weakness at a time where a more meaningful response was crucial. And a lot of people think that Putin really has already won the war in the sense that he doesn't really want to go to war because it's costly. They don't get much out of it. And there's going to be a lot of bloodshed and a lot of money spent. What he wanted to do was show weakness in the US and Britain, and they basically said, hey, we're not going to enter into a war. We'll put on some sanctions, but that's all we're willing to do. So that might show to other countries, hey, maybe we should go with Russia. Russia is the big bad bulldog that's going to maul anyone that comes near us, and the US is just going to provide some sanctions. So maybe that's what they were really trying to do, just weaken the allies that we have. And of course, like I said, I'm not a political scientist, but that would make sense to me. Now, I think there are a couple ways we can think about this and think about how the market is going to react to this. First of all, I think there's a chance that if we go to war, or if we don't go to war, but Russia invades, I think there's a chance that the Fed won't want to raise rates as aggressively. Right now, some banks like JP Morgan are saying that they expect 9 rate hikes. 9 consecutive rate hikes going into next year. I think that's a lot. I think that's really aggressive. And I don't think that right now the Fed can really do that. I mean, the Fed can do whatever they want, but the fact is, if they do that, they're going to have to be paying a significant amount. I believe it's right around $600 billion if they raise rates by 2% because they have $30 trillion worth of debt. So they're going to have to pay a lot more every single year. And that's going to also slow down our GDP at the same time. So yes, they have to combat inflation, but they have to almost do it over years, in my opinion, because otherwise they'll stifle GDP growth and it could cause a massive recession. Also, with everything that's happening in Russia, there's a lot of fear also just in the economy. We do have some PCE inflation numbers coming out this week. They come out Friday. So the consensus is for a raise of another 0.6% in January. And this is after December's 0.4%. This would be the 14th consecutive monthly increase. Also, they are looking at about a 5.2% increase in core PCE in January, which strips the volatile food and energy prices. So get ready. Might be a little bit volatile on Friday, depending on what's coming out. But overall, I think it's going to be interesting to see because, again, if we don't go to war, great, kind of clears up a lot of the fear in the market, or if Russia stops, it really makes it clear that they're not going to invade and they start pulling troops back. Great. If they go and they invade and then the Fed doesn't raise rates, that's also good in a way for the stock market and the crypto market. Now, I think that would still be worse overall. There's still going to be a lot of fear and there's going to be volatility no matter what. But right now, I think we're closer to the bottom than some people think. I think some people still assume that we're going to fall 30% or something like that. We're going to hit another huge crash. And I think we will dip more. And I'm talking about stocks specifically. And I think we could dip more unless this gets cleared up. But overall, I'm not as fearful as a lot of other people. And maybe that's naive. But overall, I think we have come down a significant amount. Now in crypto specifically, we have some news. First of all, there's a lot of fear. Extreme fear. We were just at 25 yesterday. Now we're at 20 on the fear and greed index. But institutions were still buying last week. So this just came out yesterday. We saw inflows of 109 million. But where was this going? Where was the majority of the money going? Bitcoin. Bitcoin had about 75% of the incoming money, actually more than that, about 80% of the incoming money going into Bitcoin. Ethereum had more outflows. We've seen this pretty consistently this year. We've had a couple weeks where money was actually going in, but pretty consistently we've seen money flowing out of Ethereum. Maybe that's because they are just not the best chain out there. They're not the best blockchain for high transaction speeds and costs and stuff like that. Maybe it's because they have less confidence about ETH 2.0 coming on time, stuff like that. I'm not exactly sure, but we have more money going into multi-assets, some money going into Solana, and then we have a large amount in this other category. We usually don't see this, but 25.4 million. Now, where is this going? Well, it's going into Avalanche. We saw 25 million go in last week. That makes sense because Avalanche was actually up a significant amount for the last week. It kind of came down over the last day or two, but before that, we were up around 90 when the rest of the market was really red. You could see we were actually close to $100. So Avalanche was pushing pretty heavily, and over the last few days, it's come down a lot, but still, it has a lot of institutional money flowing into it. Moving on, though, we have a new report coming from El Salvador that their tourism has surged by more than 30% since the adoption of Bitcoin law in September 2021. A ton of people going there. And then we also had GDP numbers coming up that we saw about a 10.3% growth in 2021. It's also increased 13% year over year in January. So a lot of people going to El Salvador, a lot of growth happening after they introduced Bitcoin as legal tender. Might make some other countries kind of curious about trying this out themselves. Might make some people excited about the possibilities here. We did see a new report from a bank. They say even in an extremely bearish crypto market in which values were to drop 80%, less than half of the investors say that they would reduce their investments or exit the market. However, this is with about 80% of those surveyed admitting that they had been investing in crypto in the past 6 months, and this is back in December. So a lot of people probably invested during late summer, saw the rise all the way up till November, and then right at November, it started to dip. And do you remember right around Thanksgiving, a lot of people were excited for the dip. When we're in a bull market, a lot of people love dips because of the fact that you feel like you're getting a significant discount. So at that time when they were surveyed, they were probably like, heck no, I'm not going to sell because either I'm down because I just bought, or it's just a little bit of a dip and we're still going to the moon later. So I think this might be a little bit misleading just because of the timing and how new all the investors were. I could be wrong, but I think the majority of people now, if you surveyed them, would be a little bit more bearish and more willing to sell if we were going to go into a massive bear market. But I just did my video just yesterday or the day before on why I'm so bullish. I think it was just yesterday, on why I'm so bullish long term still, and how I will be buying crypto moving forward. If you don't know, I have a significant amount of money sitting on the sidelines in Anchor Protocol. That is a stablecoin yielding protocol that gives me about 19.5% interest a year. And I have some in BlockFi. I have some in other platforms too that give me a significant amount of passive income. But if we fall down significantly, I will continue to layer in and buy more on the dips and take from some of that stablecoin. Now, Bitcoin is what I'm going to be focusing on because we are looking a little bit uncertain. And Bitcoin just doesn't move as much as some of these other altcoins. But if we start moving up, Bitcoin's going to be the first thing that moves up most likely. And then the altcoins will follow. So it's easier to see on the way up when it's time to start buying altcoins. Now I plan on dollar cost averaging a little bit into some of these other altcoins just in case I'm not by my computer or I don't see some massive news or something like that and it pushes the whole market up. But it's going to be a very small portion of what I put in compared to what I'm buying in Bitcoin. Bitcoin's going to be here to stay for the next 15, 20 years, but some of these other cryptocurrencies might not be around. They might be out of business. They might not have any holders. They might just be dead in the water in a few years. So I'm just going to play it a little bit safer now that we're looking a little bit more bearish, but I'll still be dollar cost averaging a small amount into some of my favorite cryptos, some of the ones I think have the brightest future. So if you guys don't mind hitting the like button, subscribe button, I appreciate that. There is that link to FTX underneath the video, and I will see you in the next one. Bye.